Well, I just don't get it. I just truly don't get it. There must be cognizant dissonant, or people just want to bury their heads in the sand. Because what happens when it peaks? What happens when real estate peaks? When it peaks, it's over. It means it's not going any higher in this cycle. And these are 18-year cycles. So it means it's not going to get this high for a long while. So when it peaks, it means it's probably going down, because peak means it's at the top. And when it's at the top, means it's not going any higher, and you're at jeopardy. So let me go to my next slide here. That's what happens. Now, I've been talking about this over and over and over again. Now, I guess it depends on what market that you're in. Now, I'm here in Maricopa County, home of Scottsdale and Peoria and Chandler. We're doing incredibly well here. We've got the chip manufacturers. We've been in the news with Intel and Taiwan Semiconductors. They're building these huge billion-dollar plants, and of course, it's bringing in thousands and thousands and thousands of jobs. But we're not immune. So yes, we're probably better than a lot of places, but we're not immune because the market has peaked. Now, here in Maricopa County, like Florida, Texas, and Arizona, they're used to people moving into the states. And of course, if you can't sell your place in Chicago, you're going to have trouble coming, anywhere else in the states, in Texas or Florida or Arizona. So we expect to slow down, and we are slowing down a little bit. We led the way going in, but in the last great financial crisis, we were the poster child for bad business, and that's not going to be us this time. We wore that crown, and we're not going to wear it again. But there are some around here. I think Florida is already starting to crack. They're having problems. That's going to become a national problem. And of course, Texas, Austin, of course, has been singled out. And these places are a little overbuilt. It's going to take a while for them. They're great markets, but they're going to take a while for them to work off the excesses. This is part and parcel to the cycle itself. Now, I've been talking about the fact that we are coming to the top. Now, the top is a process. It is not a peak in time. It's a process. You can see these things. So we're going to talk about what's going on, but we are peaking, and it's being focused in the commercial. This is like it was in the 80s when they changed the depreciation schedule, and a lot of buildings became non-viable. Once they became non-viable, nobody wanted them. That's what's happening with these office buildings, and of course, it's going to spill over into multifamily as well because of financing. So once they become non-viable, and of course, we talked about this before in prior videos, and we talked about the infinite returns strategy, which is, they take all their equity out and transfer all the liability and all the risk to the banks, and the banks are in trouble. By the way, watch my other videos. We've been chronicling this. This has been something we've been talking about. If you like our videos, it takes us, we do a lot of research. We try and do our very best with it. Give us a thumbs up, subscribe. Really helps us with YouTube. Let me go to my next slide. Let's just talk about what's going on right now. So this is just the travesty. This is the whole crux of all the problems, is that we have over 1 billion square feet of office space. And it's giving us a 5 to 10 or risk every month because they're no longer viable. And if they're no longer viable, and we've transferred, really, they've taken all their equity out of a property. That's called infinite returns. They put the risk onto that of the lenders, and the lenders don't want these properties. The investors are going to walk away. They're not going to, if they're no longer viable, they can't make money. And the market peaked. Well, then they're going to give these properties back. And it's pervasive in these cities: Chicago, Milwaukee, Minneapolis, Los Angeles, San Francisco, New York, Philadelphia. If you've got properties in these cities, we have been pounding the table that you really need to talk to your brokers and find out what your outlook is looking 4 or 5 years out, because I think a lot of you are going to be surprised at what the outlook is. And, we've been talking about doing a 1031 exchange. Now, if you've been in our group, we have not put any new capital out since March of 2022. Now, we've done 1031 exchanges like crazy because what we're seeing is a shift of demographics. We're seeing people getting out of California, getting out of Seattle, getting out of Portland, getting out of Chicago. They're selling their properties and doing a 1031 exchange. And a 1031 exchange is very, very reasonable, and it defers your capital gains. So you can just transfer your investments from one location to another and get into a really good marketplace. I mean, that just makes such great business sense to do that. But if you're in one of these cities, you should really be starting to talk to your broker, because these guys are at risk. Now, look, we've talked about this before. Look at Los Angeles. Now, Los Angeles has the U.S. Bank Tower. That's one of their iconic buildings. There's so much vacancy, it's going to take over 30 U.S. bank towers are vacant. Just put that in perspective. There's over 30 20-story buildings that are vacant. Look what's going on in Manhattan. So Manhattan has 26 Empire State Buildings vacant, over 76 million square feet of office space. And it's growing because, man, in mid-Manhattan, they've got all kinds of huge skyscrapers that are being completed this year. You know, it takes 2-3 years for these skyscrapers to get going, and they're completing them in the worst possible time frame they possibly can. And it's just going to add to the growing list of vacancy. And it's very, very bad for the central business district for these companies. Now, we've talked about this before. San Francisco with Park Hotels, they defaulted on $725 million. They were ongoing business, so they defaulted on the Hilton San Francisco Union Square and the Park 55 San Francisco. These are huge, enormous buildings, but $725 million. Someone took some huge losses on that, and it's not over with yet. We're going to see more and more of this coming. So let's take a look at where we're going with this. So PIMCO has let go of $1.7 billion. I think that was about 7 towers. And we've seen Westlake. Now, this is in Houston. This also has gone down. It was valued at $121 million and just sold for $20. So that's less than 20% of what it was worth before. So that's down to 10 or 15% of what it was. This is what's happening in the commercial space. They are leading the way on a cycle completion. Now look at, here's Westbrook Partners back in San Francisco at the Four Seasons. They haven't made 90 days worth of payments and are being noticed that if they don't get this current, that they're going to go face foreclosure, but the building is no longer viable. And I'm guessing they're probably, if they're 90 days behind, they're probably not going to bring it current. This is also happening in the financial district. There's another Hilton that's going bad. And look at this. This is in Pittsburgh. The Pittsburgh Post-Gazette is estimating 17 buildings in Pittsburgh downtown are in distress already. 63% of the entire downtown. And of course, these are part of their tax base. So when you start seeing buildings that are in distress, they're talking about over $30 million in real estate taxes that someone's not going to pay. You know, this is very, very bad for the central business district. All the retailers, no one's parking down there. No one's taking care of commuting. They're not buying gas down there. Not buying lunch down there. They're not shopping down there. Not coming out for entertainment and going out for drinks afterwards. It's just terrible, terrible. It's a knock-on effect that's very, very bad. Now, I've talked about this and talked about this and talked about this. What do you think happens when the market peaks? Now, just take a look at this. Now, this market top. I got this morning from the Federal Reserve Electronic Data System. They're very authoritarian, but they are a couple months behind. So we're looking at Q4 of 2023. So we're probably a quarter behind. But they clearly show the peak that we talked about. Now, here in Phoenix, Arizona, we peaked in March of 2022. The national peaked in fourth quarter of 2022, and that peaked was at $479,500. And Federal Reserve is showing this graph that they peaked in Q4 of 2023 at $417,500. So it's dropped $62,000 in about 18 months. So that's what happens when we peak. Now, and it's centered in commercial. And I'm going to tell you that it certainly puts banks at jeopardy. And that has to do with lending. And this is a knock-on effect. So if you don't need to refinance your house, it doesn't affect you at all. It affects you when you need to refinance your house, when you move. So you get transferred. And all of a sudden, you have to be concerned about what the new interest rates. That's called the lag effect. And the longer you go along, the more people are affected by it. And that's the lag. That's why it takes about 15 to 18 months for when interest rates peak. And we're there. We're there now. So this, where we dropped $62,000 in about 18 months, is probably going to accelerate nationally, get a lot worse. Now, some places around the country are not going to be as affected as others. I think Maricopa County, Phoenix, thank goodness, I think we're not going to be the poster child. Last time we were the laughing stock of the country because we did everything wrong here, and not so this time. I think that crown's probably going to go to some places in Florida, maybe in Texas, where they were over exuberant. Now, those are great markets. They will eventually come back, but not yet. So what does this mean for you? What does this mean for you to do? So if you need to sell when we peak, what does that mean when we say we peaked? What does that mean when we peaked? It means it's not getting any more. So if you're waiting for prices to get better, they're not going to get better. So if you need to sell, you need to sell now. So sell now. Talk to your broker and sell. If you're if you've got investments in some of our endangered cities, talk to your broker. Do a 1031 exchange, and let's move to a better parts of the country. We'd love to have your business here. But if you need to do it, you need to sell. You need to do it now. So get out while you can. Now, we'd love you to talk to us. This is the number that you can reach me at. We do this for a living. We have a couple of programs here. We've been doing this for a really, really long time. We're really, really good at what we do. So we'll certainly help you. We'll assist you. We'll hold your hand. We'll guide you the entire way. And you can make all the major decisions. We'll implement whatever you want. Or you can invest with us, and we'll do everything for you. So whatever works for you, let us know. Talk to your advisors, talk to your spouse, talk to your financial people. Give us a call, see where we can fit into it, but let's get it done and get it done as soon as we can. My best to you.